Conforming loan, according to Fannie Mae and Freddie Mac. A conforming loan, quote, conforms, end quote, to the standards established by the quasi-government mortgage companies Fannie Mae and Freddie Mac. This means that these loans now become, quote, government-backed, end quote, or government-guaranteed. So, if the loan is not repaid, the lender can be made whole by the government within established limits. What conditions make a loan conforming? Conditions like established borrower credit scores, debt-to-income ratios, debt-to-equity ratios, upper limits of the loan, etc. A conforming loan is a loan which fits within the requirements of Fannie Mae and Freddie Mac, and is therefore, quote, government guaranteed, end quote. Correlative rights doctrine. Reasonable share of underground water. The correlative rights doctrine has to do with underground water rights. More specifically, the correlative rights doctrine says that a landowner has the right to take a reasonable share of underground waters which does not infringe on adjoining owners' rights. Riparian rights have to do with property adjoining flowing water, like a river or stream. Riparian rights have the same principle that riparian property owners may have reasonable share without infringing on other riparian owners. Littoral rights have to do with land on a lake and specifies reasonable water use. In any case, water cannot be owned, channeled, or dammed for the benefit of one owner at the detriment of other owners. Covenant. Promise. The word covenant means a promise. I always think of the Last Supper where Jesus held up his glass of wine to the disciples and stated that, "This wine represents my blood and is the blood of the new covenant," and so described a promise between God and man. If that example is a little too dramatic, marriage is a covenant between two people. It is a promise between them. Citizenship might also be a good example of a covenant. It is a promise the citizen makes to the country. Organized society is dependent on covenants or promises which are made between people or entities. A covenant is a promise. Conditional use permit. Exception to existing zoning approved by city. Zoning is the concept that a city or municipality be divided into areas by use of property. Residential use means people live there. Commercial or industrial use means people work there. We separate the two because living next to a potentially dirty and noisy factory is often unpleasant. A conditional use permit is an exception to existing zoning. A conditional use permit can be requested of the city council or group that controls zoning for a city. The result would be a residence in an industrial zoned part of town, for example. The conditional use is the actual allowed use of the conditional use permit. A conditional use permit is an allowed deviation from current zoning. Related words, conditional use. Mutual consent. Minimum level of agreement for a contract to be legally binding. A valid contract requires legally competent parties, mutual consent, lawful object, and acceptable consideration. Mutual consent is also called a meeting of the minds. It means that the parties have to come to an agreement. However, there are different levels of agreement, including mutual assent and genuine assent. Genuine assent is freely made mutual consent. Mutual assent is not just agreeing to the letter of the agreement, but agreeing to the spirit of the agreement. Mutual consent is the minimum level of agreement required for a contract to be legally binding. Synonyms: meeting of the minds. Related words: mutual assent, genuine assent. Negotiable instrument. Piece of paper with a promise to pay an amount by a time. An instrument is a legal document or piece of paper containing written words pertaining to legal issues. The irony of negotiable instruments is that the quote, negotiable end quote part may refer to prior to the signing of the agreement. Once it is signed, it is not negotiable, but it is an unconditional agreement to pay an amount of money by a definite time period. Conventional loan. Loan made without government guarantees. A conventional loan is one made without government guarantees. A conforming loan is one made with government guarantees like FHA loans, Fannie Mae and Freddie Mac loans. A non-conforming loan would include jumbo loans and subprime loans. What does it matter? It probably matters more to the loan markets than to the consumer. It's within the markets where real estate loans are bought and sold that the category of conventional, conforming, or non-conforming matters most. How that filters back to the consumer is if one type of loan is more resellable than another. Then the interest rate might be more competitive on that loan and therefore more attractive to the consumer. Conventional loans are loans made without government guarantees. Vesting. How title is held. Vesting is a word that describes how title to a property is held. There are two types of ownership: separate and concurrent. Separate is ownership by an individual or a corporation. Concurrent ownership is for two or more owners. For two or more owners, the options are the four types of tenancy: common tenancy, joint tenancy, partnership tenancy, and common property tenancy. Since tenancy is only an issue with two or more owners, a single owner always vests title as an individual or sole ownership. Vesting is how title is held. Mutual Mortgage Insurance, MMI, FHA. Mortgage insurance of mortgage default. The Mutual Mortgage Insurance, MMI, fund is a fund set up to insure mortgages guaranteed by the Federal Housing Authority, FHA, in case of default. The MMI fund is funded by premiums charged to mortgage holders with less than 80% equity in their property. Related words: mortgage insurance. Capitalization of income. Converting a stream of income to a present value. Capitalization is the process which takes a stream of income and, according to a specific method, accumulates it into a lump sum to represent a total value of the stream in present terms, called the present worth. A capitalization rate is used to represent the potential risk to the income stream over the capitalization period.